The most dangerous pressure point in America is not where most people are looking. It is not the Navy. It is not the stock market. It is not even the dollar by itself. It is the debt market. That sounds boring, which is exactly why it matters. A missile launch gets attention immediately. A tariff war gets headlines. A speech about Greenland or NATO or China gets clipped and argued over for days. But the bond market does not move like that. It does not shout. It reprices. And when it reprices, it can do more damage to a superpower than a threat from any single enemy. The United States is still the biggest economy in the world. It still has the strongest military. It still sits at the center of global finance. It still has the currency everyone else uses when they need to trade, borrow, save, and settle. But that entire position rests on one quiet assumption. The rest of the world must keep trusting American debt for almost a century. That trust looked automatic when the US government needed money. It issued treasuries. Japan bought them, China bought them, Britain bought them, Europe bought them, pension funds bought them, central banks bought them, banks used them as collateral, investors treated them as the cleanest asset in the world. That is how America built a financial empire. It could borrow at low rates because everyone believed the same thing. America was stable. America was predictable. America was liquid. America would pay. Even when Washington fought with other countries, its debt was still treated as neutral. That neutrality is the real asset. And that is the asset now being tested. The headline says America has $38 trillion in debt. That number is too large to feel real. So here's the number that matters more. The US government is now spending roughly $1 trillion a year just on interest, not roads, not factories, not schools, not new weapons. Interest, the cost of yesterday's borrowing. And that interest bill is now larger than the defense budget. That is the sentence people should sit with. America spends more paying creditors than it spends funding the military machine that makes it look untouchable. That is not just an accounting problem. That is a power problem. Because once the interest bill becomes that large, every tiny move in yields becomes political. Every Treasury auction matters. Every foreign buyer matters. Every central bank decision matters. A small rise in borrowing costs can add tens of billions of dollars to the annual burden. A larger move can add hundreds of billions. That is the trap of scale. When the debt is small, higher rates hurt. When the debt is enormous, higher rates govern you. Now here's the part most people miss. America's debt is not only a domestic issue, about a quarter of it is held by foreign investors, and much of that foreign ownership sits with countries America has spent the last year pressuring, threatening, or antagonizing. That creates a contradiction. The same allies and rivals that Washington pressures through tariffs, sanctions, trade threats, and military language are also part of the investor base that funds Washington's power. That is the hidden weakness. If America's power is financed by other people's confidence, then confidence itself becomes a battlefield. This is what capital warfare looks like. It does not begin with a carrier group. It begins with a sell order. It begins with a pension fund deciding U.S. Treasuries are no longer politically neutral. It begins with a central bank trimming exposure. It begins with China reducing holdings. It begins with Europe asking whether the euro should play a larger reserve role. It begins with Japan warning that American trade policy could destabilize global capital markets. Each move looks small by itself. One fund selling $100 million of treasuries does not break a market measured in tens of trillions. Even China reducing hundreds of billions over time does not automatically collapse the system. But the signal matters more than the first sale. Once the safest asset in the world starts being discussed as a political lever, the psychology changes. A treasury stops being just a treasury. It becomes exposure to American behavior. That is a very different market. For decades, countries held us debt because it was the default. In a crisis, buy dollars. In uncertainty, buy treasuries. In panic, run to the American system. But what happens when the source of uncertainty is the American system itself? That is the question underneath this entire story. If foreign demand weakens, America has to offer higher yields to attract buyers. Higher yields mean higher interest costs. Higher interest costs mean bigger deficits. Bigger deficits mean more debt issuance. More issuance means the market has to absorb even more supply. That is the spiral. At first, it is manageable. Then it becomes expensive. Then the bond market starts setting the limits of political power. No president likes that. No superpower likes that. But the math does not care about pride. A government that depends on borrowing eventually has to listen to its creditors. It can pretend otherwise for a while. It can give speeches. It can blame foreign enemies. It can insist that the economy is strong. But when yields rise, the bill arrives, and the bill does not stay in Washington. Treasury yields are the reference point for almost everything else. Mortgages do not move perfectly with treasuries, but they are tied to the same pressure. Corporate loans feel it. Student loans feel it. Car loans feel it. Credit cards feel it. Banks feel it. Pension funds feel it. Stocks feel it, because higher bond yields make risk assets less attractive. So a political fight between governments can become a household problem very quickly. Foreign holders sell, yields rise. The US pays more, mortgage rates rise, businesses borrow less, stocks fall, consumers carrying record debt get squeezed. Suddenly, something that began as a geopolitical signal becomes a cost of living shock. That is why debt is such a dangerous weapon. It enters through the top of the financial system and exits through ordinary people's monthly payments. But there is another reason this weapon is so dangerous. It hurts the user too. US Treasuries are not just American IOs. They are the collateral of the world. Banks use them. Pension funds hold them. Sovereign wealth funds rely on them. Financial institutions treat them as the closest thing to cash with interest. If a coalition of countries dumped treasuries aggressively, they would not only hurt America, they would hurt themselves. Prices would fall. Their own holdings would lose value. Banks would need more collateral. Funds could face losses. The global system would tighten. That is why this is not a clean weapon. It is not a rifle pointed at one target. It is a grenade in a room where everyone is standing. That is also why it probably does not get used all at once. The more realistic danger is slower and more powerful over time, a little less treasury buying, a little more gold, a little more euro exposure, a little more short-term debt instead of long-term bonds, a little more trade outside the dollar, a little more hedging, a little more doubt. That is how financial systems change, not always through a dramatic collapse, often through 1,000 quiet reallocations. The dollar does not have to disappear for America to weaken. Treasuries do not have to crash for America to pay more. Foreign governments do not have to sell everything to force Washington into a smaller room. They only have to demand a higher price for trust. That price is yield. And yield is where global politics becomes budget math. This is why the Greenland controversy mattered. Not because Greenland itself decides the future of the dollar, but because it showed the shape of the new battlefield. If Europe cannot confront America militarily, where does pressure go? It goes into finance, it goes into reserves, it goes into exposure, it goes into the question every government must ask quietly: how much of our national savings should depend on American restraint? That question did not used to be asked so openly. Now it is, and once that question enters the room, the old system has. The strongest argument against a Treasury revolt is obvious. There is no perfect replacement. China's yuan is not trusted enough. The euro is not deep enough. Gold does not pay interest. Japan has its own debt problem. Emerging markets are too risky. No other market can absorb capital at the same scale with the same liquidity. That is America's strongest defense, but it is not the same as immunity. The world does not need one perfect replacement to reduce dependence. It only needs enough partial alternatives to make America pay more for capital. That is the danger. Not dollar collapse tomorrow, not default tomorrow, not the end of America tomorrow. The danger is a more expensive empire. A country can remain powerful and still become financially constrained. It can keep the aircraft carriers and still lose flexibility. It can keep the reserve currency and still pay a higher political risk premium. It can keep the largest economy and still discover that its creditors now have opinions. That is the stage America may be entering. For decades, Washington used the financial system outward. Sanctions, dollar clearing, freezing assets, blocking payments, cutting off access. America weaponized the center of the system because it controlled the center. Now others are beginning to ask whether their participation in that system can also be weaponized. That is the reversal. America used access to the dollar as leverage over the world. The world may now use financing the dollar system as leverage over America. This is not a prediction that everyone suddenly dumps us debt tomorrow morning. That would be too simple. The real world is more careful than that. Major holders know they would damage themselves. They know treasuries still matter. They know the system is too interconnected to break casually. But they also know something else. Now, America is vulnerable to confidence that awareness alone changes behavior. A weapon does not have to be fired to affect the room. Sometimes everyone only has to know it exists. So watch the bond market, not just the stock market, not just presidential speeches, not just tariffs. Watch who is still buying treasuries. Watch who is quietly reducing exposure. Watch what happens to yields after major political threats. Watch whether foreign central banks keep treating us debt as neutral savings or start treating it as American political risk. Because the first real sign of American weakness will not look like weakness. It will look like a higher yield. It will look like an auction that clears, but only at a worse price. It will look like allies saying nothing publicly while changing their portfolios privately. It will look like gold rising while trust falls. It will look like the world still using dollars, but no longer trusting them for free. That is how the age of financial warfare begins. Not with one dramatic shot, with conditional trust. And once trust becomes conditional, the most powerful borrower on earth has to learn the same lesson every household already knows. Your strength is not only what you own, it is what your creditors still believe.